Hi everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets, on Wednesday, the 13th of August. The European markets have started fairly mixed actually, and to be honest, the big story continues to be that the volatility in the last few days on the DAX, which again after yesterday's big decline, we're now slightly higher again, and you got the FTSE, which is basically flat on the day. So FTSE is basically not really moving anywhere, whilst DAX is really chinging around on these ups and downs, and it's rather a volatile move that we're seeing continuously on this DAX chart. But I'll go into that in a little bit. The Beside from that, though, the markets are actually fairly cautious, and that's been driven also by a lack of volume and no real direction on Wall Street as well. Asian markets additionally are fairly flat as well, although there has been a fair amount of data out from Asia overnight. Chinese industrial production and retail sales both missed expectations, but then you also had the Japanese GDP for Q2, which actually, although it was actually a down 6.8% on an annualized basis, that was actually better than the 7.1% that was lower ultimately throughout Q2 as well. So it actually came in ahead of expectations, and that sort of helped to stabilise the markets a little bit. But certainly the real direction is being seen on the DAX today in European trade. For currency trading, again a little bit of a mixed open. In Asian trading, there was no real direction, but now once the Europeans have got going, they've been selling the euro once again, but also interestingly buying sterling. Sterling had a big rebound yesterday, and it looks to be now something possibly going on there, and I'll talk about that in my sterling analysis chart in a little bit. But certainly there could be something going on there, and that comes ahead of that key Bank of England quarterly inflation report that comes out at 10:30 today, whereby Mark Carney will be laying out the new projections for inflation and growth by the Bank of England, and then from those projections, the market will then speculate over when the first interest rate hike will come. Before that, you've also got the unemployment data for the UK. Unemployment in the UK is expected to fall again, back from 6.5 down to 6.4, so another strong improvement in that employment data, and that comes out at 9:30 today. Then we move on to the afternoon. Once we've digested all that Bank of England report data, you've got the US retail sales at 1:30, forecast to come in month on month at 0.2%. But in terms of volatility on the markets, I said yesterday that there was a sharp decline in the VIX. That continued yesterday again, a little bit of a drift back lower, so we're now well below that 15 point. And that volatility continues to correct. And obviously, if you see the stock markets in the last couple of days, certainly aside from the DAX, they've been fairly flat and no major moves that we've seen. On the dollar index, that correction that seems to be gathering pace once again on the euro has pulled that dollar index higher, so that is certainly showing dollar strength. So my chart today, as I alluded to earlier, is the DAX, and the DAX has been very volatile in the last couple of days. Sharp gains and losses throughout the last few days. We had a gap higher on Monday from the 9061 high that we posted on Friday. That gap completely through that, and that gap was then filled by a correction yesterday. Filled but not closed, which I think is a very potentially a very interesting point to make. When gaps close, that means that the market retreats to the gap and then closes below where the gap had previously been. That is a bearish signal, but when the gaps are filled, i.e. intraday, it trades below the gap to fill it, and then it closes above that level of the gap. That can potentially be a bullish signal, and that seems to be what we're seeing again today, that the DAX has rallied again today, sharply higher, 0.8% higher on the open. and it's looking okay. Now, in terms of what we're looking at on a rebound, you've still got that, as I said on Friday, you've still got that key March low intact at 8913, around that sort of level. So that although that you've had this big weakness in the DAX yesterday, there's still signs that perhaps there's not too much further downside. You've also got these momentum indicators that are had been in oversold territory and beginning to turn up now. So look at these stochastics as well. RSI is creeping back above 30. Stochastics also beginning to give a buy signal, so that's an interesting point to make as well. So some signs that perhaps this sell-off in the DAX may be beginning to find a bit of grounding. This is on the hourly intraday chart. You'll see that it certainly has picked up off that low at 8903, so just 10 pips below that 8913 key March low. So you'd say that that is now the big support area in play. Now, in terms of what we need to do today, you need to rally through. I think Monday's high at 9199. If you start to see that, then we could be away in the races in terms of a potential recovery. But then you've got just minor resistances at 9243, and then up at 9300 again, so 9304. So some levels to watch out for there, but you'd certainly say that the low from yesterday at 9050 is the key support now on a near-term basis, and if you start to lose that, then it could quite well see a retreat back towards that low. But at the moment, it looks like the reaction is fairly positive on the DAX, and it could be the beginning of something in terms of a recovery. So we'll see how that one pans out. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thank you.